Hi, this is Paul from globaltradingsoftware.com, and this is a futures trading tutorial with harmonic patterns, and I'm going to be using the manager to manage the trade. I'm using TradeStation version today, and the link in the description of the video will be for the TradeStation version of the auto harmonic indicator and also the manager, and then it's available for lots of other platforms, and those links will be there as well. So harmonic patterns is one of those complex trading strategies that a lot of traders just either ignore or spend way too much time trying to learn because there's lots of fib extensions, fib retracements, overlaps and all those sort of things, and it gets really complicated. So what we've done at Global Trading Software is the xBrat Auto Harmonics basically does all that work behind the scenes for you and prints the harmonic pattern on the chart. One of the most important things is this automated completion zone, where this D pivot is here. So that is printed as we get through the ABC here. Now this has to be hit by the D pivot for a resulting trade to be high probability. So it has a zone that it completes in, and sometimes it doesn't. Sometimes it shoots through, sometimes it's short, and we don't trade them. But when we get the sweet spot, when the D pivot completes in there, and this is a crab pattern, again, where my cursor is here, it labels it a crab pattern. It's labeled it in red. It's finished in the auto completion zone. There is a bearish trade on the cards here. This is what we need to look for. Now, as far as entry is concerned, you can be reasonably aggressive, but let's have a look at price action here. Let me just zoom into this a little bit. Just here. Okay. So with this price action here, we seem to be forming what's normally called a bullish pennant at this point. So what we want to make sure is it doesn't break to the upside. So once we start to get these dojis form at this point here, an entry just below these dojis is sensible. Okay, that is the aggressive entry strategy. If you want to be more conservative and make sure it's on its way, a couple of things you can do. When it breaks the initial start point of this harmonic pattern at this point here, where my cursor is, if you look right there, that would be one potential conservative entry strategy there. When it breaks that, we've broken this pattern, we've broken the start point of the pattern, and that's a good time to enter the trade. So once the trade is in, it's pretty much trying to manage that trade. So let's just put a couple of lines and things on there. So what I want to do is we want to go for the entry strategy, which is just below there. So the more what we would call more aggressive entry there, where that line is. Okay, so that's our entry. We're then going to use the manager. We've got some targets, some fib targets with the harmonic patterns, 386, 618, 100%, which takes us to the C pivot here, the 127 and the 1618. As you can see, this one just blew through them all. But let's look at this behavior. So the manager, you see the ribbon here starts to turn red at this point. As we're getting down towards that 100% line, as long as that ribbon remains red all the way down here, we stay in the trade. So that's price action. When we look at volume on this move down, so I'm going to zoom in a little bit to here. Okay, so this is the trade. So the dots up above the candles are higher than average volume. Okay, the little pullbacks here, you see these blue dots below the candles, that's a lower than average volume pullback. In a lot of cases, traders would panic at this point and take their profit. What the manager does is stops you from doing that. We come back down again. We pull back up against the trend of the trade, but it's lower than average volume. Then we get some down candles, higher than average volume, one up candle, higher than average volume. Beware, be ready. But then we get the down candles again. Now we pull back up again on lower than average volume. We're down at 127 now. Well, a sensible place here is once we're testing this 127 line, is to put your trailing stop just above the 100% line here. We do get 2 consecutive higher than average volume candles here, so that stop position locking in profit there is the sensible strategy, and this is why we put those targets on there. But then it pulls back down again. Now we're testing the 161 line. We come back up again, we get another pivot, then we push down through. Look at this, the ribbon remains red all the way. So now once we've pushed down through here and we're going flat, your trailing stop should be at the 1618 level, locking in lots of profit. We then, moving sideways, we do push down again, but eventually, if I just zoom out again, the ribbon turns green at this point here. So it's a fantastic trade. This is the 15-minute time frame on MNQ, so it's one of your tools for trading. They don't necessarily happen every day. When they do happen on a 15-minute time frame, you've got to be prepared to swing them over to the next day. So if they happen on a Friday, you are not going to trade them. You are not going to carry them over the weekend. But if they happen on a Monday, Tuesday, Wednesday, Thursday, and you have to carry them through, the most likelihood is that momentum's going there, and just manage it with the manager. That's the whole point. It's just one strategy for different types of market conditions. So you have a certain market condition that gives you that crab pattern form in the automated completion zone. The resulting bearish trade is very strong. Simple entry strategy that's been through, and then manage it with the manager to maximize those profits and not panic on those pullbacks. Be sensible. This is a 15-minute time frame. You don't need to overreact. Hopefully this helps. This is a TradeStation version. Again, check out the links below. Very, very simple strategy. All the heavy lifting is done behind the scenes for you. Then it just printed on the chart.